and get. Thank you, Craig. And thank you and welcome to everybody who is joining us today at the Maryland Insurance Administration's open hearing on condominium insurance coverage. My name is Kathleen Borain, and I serve as the Maryland Insurance Commissioner. Today's meeting is going to focus primarily on House Bill 98, which was enacted during the 2023 legislative session. House Bill 98 changed the property insurance requirements for condominiums that are set forth in the real property article. The changes include reducing the coverage that the Council of Unit Owners is required to maintain for residential detached unit, and that law change also requires that the owners of those residential detached units have to purchase their own homeowners insurance on the entire unit. So prior to October 1st, that same section of the law required the council to maintain comprehensive general liability and property insurance on the common elements, as well as for all of the units, exclusive of improvements that were made by the unit owners. But now, as of October 1st, the council no longer has to maintain that same property insurance for the residential detached units themselves. Rather, as of that date, the council is still required to maintain property insurance against risks of direct physical loss that are commonly insured against, such as, for all of the attached or multifamily dwelling units, but not for the detached units. Therefore, as of October 1st, the owner of a residential detached unit has to carry their own homeowner's insurance on the entirety of the unit. Now, there's nothing in the statute that prevents the council from voluntarily providing coverage to the owner of a detached residential unit through a policy that's obtained by the council. And nothing in the statute requires the unit owner to identify the council as an additional insured on the unit owner's own policy. Over the last several months, the MIA has received many questions regarding the bill and its application. And so on October 3rd, we issued a consumer advisory that provided guidance. But we do still continue to get questions and comments. And so we decided to hold this hearing today to give people the opportunity to specifically ask questions or make comments with regard to House Bill 98 and its implementation. I will also say that while our focus here today is on House Bill 98, we do appreciate that there are some people that have asked questions about House Bill 107, which was enacted in the prior legislative session. That is a bill that discusses the requirements of the Council of Unit Owners or HOA associations to set reserves using actuarial studies to be sure that they have the right amount of money in reserve. And to the extent that questions are asked about that, because we have had a lot of those questions come in since we provided the notice of the HB 98 hearing, we asked Karen Strawn, who is the director of the mediation unit of the Maryland Attorney General's Office on Consumer Protection, to be with us today so that she can also provide some additional information and insight with respect to the House Bill 107. So with that, let me just take a moment to introduce the folks that are going to be here today that will be able to react to comments and answer some of your questions. And to the extent that you have questions that we can't answer immediately, that's okay. We will take those questions back and then we will get back to you and we will share the responses publicly as well. So let me start by introducing Karen Strawn from the Office of the Attorney General. Karen, thank you for being with us today.
Thank you. It's my pleasure.
And then from the Maryland Insurance Administration, let me just briefly introduce, and I'll just ask you to wave. We have William Fawcett, who's our Associate Commissioner for Property and Casualty. We have Danelsa Marchiniak, who is the Director of Property and Casualty Consumer Complaints. We have Ron Coleman, who is our Director for Property and Casualty Rates and Forms. We have Joy Hatchett with us, who is the Associate Commissioner for Consumer Education and Advocacy. Mary Jo Rogers, who's our Director for Consumer Education and Advocacy. And then we also have with us Jamie Sexton, who is our Director of Legislative and Regulatory Policy, and Riley Williams, who is the Assistant Director of Legislative and Regulatory Policy. These are the folks who will be able to provide answers to questions, also be able to take remarks, concerns, considerations to our legislators. And let's see, I have one more housekeeping item, and that is to just go over the procedures that we're going to follow today. When it's time for public question or comment, which will be in a second, we'll call first on the members of the public who are registered to speak in advance. And what we'll do in that regard is we're going to go in the order in which people ask to speak. We'll bring that, I'll announce the name and affiliation. We'll bring that person over, give them the opportunity to ask their questions and provide their comments. We'll do that one at a time. To the extent that time and technology permit, the MIA will then hear from any unregistered person who's on the Zoom webinar that has questions, would like to be heard. If you want to be heard, if you have questions, please put that in the chat function. If you just want the question answered, then we can read the question out loud. If you want to come over because you want to speak, then just make that known. And as I said, as we get to the end of our formal program, we will bring people over for that purpose. When you are in the main room, I want to ask you to keep your mic off so that we have good sound recording quality. We will also keep the opportunity for people to comment and to provide written comments through December 15th. And this meeting is being taped, and the video, as well as any written testimony or comments that we receive, will be posted on the MIA's website. So with that, I think we can go ahead and get started with the folks who have asked to be heard today. And I'll invite you to introduce yourself, introduce your organization. If you're here on behalf of an organization, make your comments and then ask your questions. And we're going to start with Claire Pantalone, who is from IAMB of Maryland. Welcome.
Well, thank you, Commissioner Birain. My name is Claire Pantalone, and I am the Vice President of Advocacy for Insurance Agents and Brokers, IAMB for short, in Maryland. IAMB represents approximately 175 independent insurance agencies throughout the state, many of whom offer condominium policies to condo associations and to unit owners. So I would first like to thank you, Commissioner Birain, and the Maryland Insurance Administration for putting together this informational hearing and for the opportunity to provide our comments. Over the past several months, as you've pointed out, we've heard from many of our members as well with questions surrounding the recent changes to Maryland law and the mandatory insurance coverage requirements for detached condominium units. We've worked to provide members with resources to help them navigate the changes. And much like many others who have provided or who will provide comments today, we have remaining concerns with the law and the implications it has for insureds and agents alike. So one of the fundamentals of any property and casualty policy is that the insured must have an insurable interest, both at the time the insurance is purchased and at the time a loss occurs. Under most condominium schemes, a condo owner holds the insurable interest in personal property and the condo unit as defined in the bylaws, but does not have a direct insurable interest in the common elements, including the structure. And I will make the caveat that there is a lot of unknown here in how those units are defined and how they may have been defined differently under this new regime. But this uncertainty is causing a lot of concern for our members. The House Bill 98's changes to insurance requirements for the detached condo units require the unit owners to cover portions of the condominium that are typically insured and owned collectively by the condo association. However, if the bylaws are not also modified to reflect these changes, the unit owner may not be able to recover damages in the event of a claim. So the issue of insurable interest is not the only concern that puts detached unit owners at risk of being underinsured. There are a few other issues, some of which we already highlighted in previous comments we've sent. If a condo association amends their master policy to only insure the common elements, the owners of these detached units must obviously increase their own coverage to reflect their change in liability. Without any requirements for condo associations to notify owners of their need to adjust their homeowners insurance policies, these unit owners have no way of knowing that this lack of notification was of great concern to agents. For agents, there is also a risk of increased errors and omissions exposure if their policyholders are affected, even if the policy was sufficient at the time it was written. There are a few other issues that have not been solved to date, we believe. The HO6, which is the traditional unit owner coverage form, may not make available certain endorsements that might be desirable for these unit owners. For example, a service line coverage. Ironically, the HO3 or the HO5 may not account for the condo regime and may lack certain provisions needed to protect unit owners. For example, waiver of subrogation against the association and other unit owners. So whether you pick one or the other, they both may be lacking certain coverages to make the unit owner have exactly what they need or what they want. The language with regards to flood, the language in House Bill 98 directly conflicts with the NFIP's RCBAP, which is the condo association policy. And it is a federal program that is not open to modifications. Under the RCBAP, the condo association covers the entirety of the building, including the units and improvements and betterments. So this conflict creates a heightened risk of error or omission on the part of our members as well. So in closing, IMB would like to offer our support and assistance in pursuing a legislative fix to the outstanding issues, whether it be an amendment or full repeal of the changes and return to the pre-House Bill 98 coverage requirements. Thank you again for the opportunity to comment, and we look forward to further discussion in the future.
Thank you. I appreciate that. I just have really one question of you, and that is from a practical standpoint, what are you seeing happening in terms of really the availability of coverage? What I'm hearing you say that there are two issues here. The first is really getting complete coverage given the existing forms. And the second thing that I'm hearing is this concern about who actually has an insurable interest in what. So that there is the potential for a coverage gap around who actually had the interest to be insured.
Right, and not being facetious, but it's a little bit of all of the above. So we do, the uncertainty is very unsettling to our members, generally speaking. And insurance agents and insurance companies to a great extent like certainty. They have to, have an idea of what they're covering and how much it's going to cost. Agents are caught between the carrier's requirements and then the insured's needs, and are trying to navigate this the best they can. In this case, there are several levels of uncertainty that are concerning. The insurable interest does not seem to have been, and I would say as a caveat that the timeline to get this done is also greatly participating and contributing to the issue, because it became effective in October, and I think it was very much under the radar for many, and this has compounded the uncertainty in the situation we're in today. So the insurable interest is of great concern if there is indeed an issue the day of the claim. So right now, we know that, our experience has been that most condo associations have not imposed this change to many owners of detached units. However, we also know that some have. And these were homes, over $500,000. Large coverage A, to speak insurance, amounts, and upwards of that. And an agent needs to know exactly how much to insure for. So the uncertainty it's a great problem for the insured, certainly, if there is not enough coverage A, and for the agent for his or her errors and omissions insurance. You added another question, and now I wanted to address it, and I don't remember what it was. I'm sorry.
No, I really was asking about sort of what the practical implications have been, and you're describing it, which is that there's a lot of uncertainty about who's responsible for what does it cost, and how does this really interface, because these coverage forms aren't really designed in this way.
Exactly. Well, the HO6 is really designed for the condo regime.
Yeah.
And now we're trying to force the HO3 onto it without having really vetted fully whether it had what it needed. You have endorsements that are designed for one form that are not available for the other. So all this is making something that is a little messy and difficult to be really fully comfortable with the outcome you're providing to an insured, something that nobody wants to be in. Neither the agent nor the insured. And the lack of notification to us is also concerning. We can't make the assumption that everybody's aware just because a law passed and nobody is supposed to ignore that. Doesn't mean that it's the best way to handle a condo association that is just trying probably to save money, when in fact the condo association, the condo regime is designed that way because it will be the most cost-effective way to insure condos.
Thank you. Okay, I'm next going to welcome Greg Gaspar from State Farm. Mr. Gaspar.
Oh, I apologize. It's Greg. Thank you for holding this meeting. We do appreciate it. I had not prepared commentary. I was simply signing in to comment as needed. That said, I'm very familiar with the Maryland Condominium Act, the 1981. I was involved slightly in the 2009 rewrite. My concern, and by the way, I'm with State Farm Property, is the master policies, the property managers, and the speed of communication, coverage, clarity, and how fast those decisions are made. Most condominiums involve water damage claims, and water damage claims need to be resolved on the coverage issue very, very quickly. So however the bills meet out, it needs to be very clear. We find that a lot of property managers know that they're covered, but then they don't react in hopes that the property insurers of the HO6s will. It makes it easier for them if we pay and then fight, or alternatively not fight, to get our money back. Thank you.
Thank you, Mr. Gaspar. I'm going to turn now to Richard Woods from the Ellicott Meadows Condominium Association.
Richard, I am not seeing Mr. Woods, but I will open up the phones just to see if he's on the phone.
Okay.
Mr. Woods, are you on the phone? No, I don't believe so.
Okay. Well, if Mr. Woods steps in, if you could just keep an eye out and let me know, we can make sure that he's heard if he's able to join us. So next I'll turn to Russell Pritchett. Mr. Pritchett.
I'm not seeing him either. Are you on the phone, Mr. Pritchett?
They're on mute, so I don't know if we can hear them.
Yeah,
Okay, you can
they
hear
are
them.
allowed to talk. Yeah. So,
Okay.
And
All right. Well, I will then invite Scott Graham from Maury, Donnelly, and Parr.
okay, he is going to be pulled over momentarily.
Okay, thank you.
Okay, Mr. Graham, can you hear us?
Mr. Graham, you're on mute.
Hi there.
Hi, welcome, Mr. Graham.
All right. Thanks for having this. You answered the main question, clearly stating that the associations are allowed to voluntarily provide the coverage for the detached condos. The other question I had, I didn't know if you were going to answer some of the questions that have been asked, like insurable interest, but I was told that the reason for the legislation was that developers are building these small number condominium associations, and people preferred to handle their own insurance separately. Why don't they just make them homeowner associations? Is there any reason why a builder cannot do that and then leave the condo act alone and save everybody a lot of hassle?
So, Mr. Graham, I'm going to say to you that I don't have any particular insight into what the motivation was behind H Bill 98, or whether there was a particular circumstance or driving force behind that. And I can't really answer the question as to, what is the dividing line and what applies to what. However, what I will say to you is that to the extent that industry or others, that there is a bill that's introduced in the coming General Assembly to address the issues that we're talking about today, you would certainly have at that point the opportunity to bring those concerns and those questions to the legislature. And one of the things that you might propose is, clarification around any questions about where that dividing line is. But I have to say, I don't have any particular insights into what was the driving motivation behind those that were pursuing House Bill 98. However, it looks like Ms. Pantalone has some comments with respect to that, and happy to hear from you, Claire.
Thank you. I didn't want to take more than my allotted time, but we totally agree with what Mr. Graham just mentioned, that we had heard also rumors. My understanding is that in order to be able to build more housing, it is you need to go under a condo regime, which allowed more concentration of housing. But our thought, and at a minimum, wishing to know of whether the MIA would be in favor of that, because it would be outside the realm of the MIA, but would be in favor of a legislative fix that would go into pushing for a zoning or setback variance that would allow these specific developers to seek a homeowners association status rather than a condo status, and which would, as Mr. Graham pointed out, solve the problem for all of us, and might be the simpler and the more logical way to handle the way this was done. But I don't have the full answer to the question.
So I thank you for that background and insight. And what I would say to you is that the Maryland Insurance Administration is just that. We are the Maryland Insurance Administration. So we will focus on, insurance issues, but there are other folks who will concentrate and focus on land use issues and development issues, and what is a condo association versus what is an HOA. And there may be the opportunity to have those policy discussions in our next assembly. But from our standpoint, what we wanted to do is make sure that we have a thorough understanding of what the impact of the law has been on the insurance issues, because there has been quite a bit of questions about that. So why don't I just go ahead and skip ahead, and I apologize to Ms. Fuller, we'll bring you over momentarily. But since Ms. Manoogian from the Legal Action Center is the one who has her hand up anyway, why don't I give you the opportunity to go ahead and ask your questions or make your comments, and to the extent that you have comments on what Mr. Graham said, you should feel free to incorporate them into the comments you were already going to make.
Great, thank you. I really appreciate you having this meeting. I think we can cut through some of the problems that we know were created by House Bill 98, some unintended consequences. So just so everyone on the call knows who I am a 16-year member of the Maryland Legislative Action Committee. We are a National Committee of Community Associations Institute. So a little bit of background about the bill. The bill came as not as a LAC initiative. A LAC initiative bill is a bill that we take up, we find a sponsor, and then we go about passing the law as we see it. This bill came to us, so the LAC can either support a bill with amendments, or oppose a bill. The bill we chose to support with amendments. Originally, the bill came from a constituent on the Eastern Shore. It did get brought by a developer on the Eastern Shore, and just so you know, out of complete transparency, coincidentally, the same developer came to me for insurance. I also practice community association insurance. So he wanted to create a very small association near Stevensville on Love Point, just over the Bay Bridge. He had bought some land. He wanted to put up 9 single family or detached units, and he wanted to annex in an existing farmhouse with a large garage. When it came time to secure insurance, I told him that he had in fact created a condominium regime, and he was flummoxed. So when you create a condominium regime, obviously you are subject to 11-114 of the Act. There are all common elements. The association is required to carry that insurance. He was required to create a condominium because of the density that he created. So the homes were built very close to one another. And, you know, once you get too close to one another, it's subject to the Condominium Act. So his son ended up, he was the one who went out and found a sponsor in Delegate Arentz. The bill came across our desk for a number of years. Delegate Marvin Holmes out of Prince George's County really did not understand the bill very well. It kept getting put into a drawer until he was convinced to support the bill during the 2023 session. The bill inadvertently pulled in associations that have these mixed developments. I think the intent was to make them applicable to associations that were 100% made up of single family units. So we do have some work to do. I want to assure everyone that Delegate Marvin Holmes has signed on as a bill sponsor on the House side. He is seeking a compatible bill on the Senate side. Everyone in the legislature has been made keenly aware that this is a problem. I think that one of the things that we need to go about, and this is where the legislature needs to come in. So the process begins in January when the session opens up. The session closes in April at sine die. The governor will sign the bill in May. Whether it is deemed to be emergency legislation, which would take effect June 1, or regular legislation, which would take effect October 1, remains to be seen. I'm advising my clients, I'm advising those who've been calling me, including Claire Pantaloni, Scott Graham, some of the other people on the call, I'm sure are not shown. I'm advising them to go with what the Maryland Insurance Administration, the opinion letter that was released following the inception of the bill, and that is that you may continue to include those units under your master policy. Now, the biggest issues that I can see are that, yes, there is a caveat in the law that requires owners of these units to also insure on the entirety of the unit. Carriers are very sensitive right now to adequacy on insuring to value. So you may see your unit, if you live in one, insured under the master policy, with you also being required to carry a limit that is as close to 100% of the replacement value of that limit. The other issue that we see is, what are you supposed to carry? So a lot of people have been saying, well, we're going to carry an HO5 policy. For those on the call, an HO6 policy is a condominium unit owner's policy. It has a number of coverages that you need as a condominium unit owner. The dwelling A limit under that policy covers and is designed to cover improvements and betterments. In Maryland, we are a single entity state, original specifications. If your unit is covered under the master policy, the policy will cover your unit for original specifications. And then you carry a limit under your dwelling A limit that it will cover any improvements, betterments, alterations, or additions that you make or that you've acquired from a prior owner. Under an HO5 policy, and I want to explain the difference between an HO3 and an HO5 policy. They are both designed for a single family or detached unit. The difference being is that in the HO3, while it's an open perils policy on the structures, it is a named perils on the personal property. The HO5 is an open perils policy for both. So if you are going to carry an HO policy on a single family, there are two ways that you can do it. You must have a conversation with your own carrier. My biggest issue with an HO5 policy, and I'd recommend that over an HO3, is that it is not going to include the loss assessment coverage that is inherent in the HO6 policy. And because you are only carrying property coverage, you are still a member of the association. If there is an undervaluation of the policy, either from a liability standpoint or a property loss, as a member of the association, you would be assessed whatever is the shortfall on insurance. Whether that loss assessment can be endorsed on an HO5 policy, you will need to ask your carrier. It could be that you can carry an HO6 policy for the entirety of the replacement value of your home, and an agreement that your coverage would be primary. This is really important for those associations where the board has made the decision to remove you from the master policy. I am really recommending that during this interim period, until the Maryland LAC can work with our legislature and our lobbyists, that you maintain, if you are on a board of directors, you maintain coverage for your units, your single family units, as the MIA has expressed you can do that. The last thing I'm going to say is that because there is a requirement to carry homeowners coverage on the entirety of the unit, you could have an issue with the other insurance clause that's inherent in many policies. So the other insurance clause would mean there's language stated either in the master policy or your homeowners policy or both that says if there is other insurance in place similar to this, we are excess. And so if both policies have that other insurance clause, you could end up with a sharing situation in the event of loss. There are so many moving parts on this. I am not insensitive to all the questions and the problems. We have taken up this issue as a LAC initiative bill, and we are going to be working very hard to make the correction. I will say that I listened to testimony recently that was given by Tony Burke of Signature Club at Greenview. It's a New Market community that is 55 and better. They spoke before Delegate Jesse Pippy. He is a delegate to Frederick and Carroll counties. One of the suggestions, well, one was to simply make this law applicable only to associations that are comprised 100% of single family or detached units. The other was to grandfather. I will say that in speaking with Scott Silverman, I believe he's on the call as well. He's an attorney with Shield Law in Rockville. We probably will not go after any grandfathering. The reason for that is that 11-142 of the Condominium Act makes 114 applicable to all associations. We're trying not to disrupt laws that exist in other areas of the Condominium Act. Probably the fix then would make this applicable only to those associations that are comprised 100% of single family or detached. I don't see a repeal of the law. We've been discussing it as the LAC and through our lobbyist, and I don't know that there is any real interest in a repeal of the law. We always want to make friends and keep friends with our legislators, and I'm not seeing any real support of a repeal, but I can assure you that we are all working very hard on this, and we understand the disruption for those of you who have been affected.
Well, thank you, Ms. Manoogian. That was very, very helpful. And we'll look forward to, tracking, what happens and what legislation is ultimately introduced in the session. Any further comments? Any questions?
I don't. I think your chat is disabled, and I can put, no, I think it's turned on now. I'll put my contact information in the chat so that if any of you need to reach me, I've worked with Karen Strawn for many years, so she definitely knows how to reach me.
That's great. And we'll make sure that we also have in the chat the email address where anyone who wants to send follow-up questions or comments can do so.
Great, thank you.
So we're now going to hear from Douglas Nichols from the Severna Enclave Condominium Association. Mr. Nichols, welcome.
Thank you. Thank you very much. I really appreciate the opportunity to speak. And I thank you, Commissioner Breen, and the rest of the administration for doing this. I was a past president of the Severna Enclave Condominium Association. I've lived here for 5 years. When I first saw the bill and it was brought to our attention, it gave us some great concerns because it didn't seem like it benefited the actual homeowners. So I did look into what the motivation was for House Bill 98. And I talked with Delegate Steve Arentz, whose name was on it, who introduced the bill. He told me that the letter from the Attorney General really spoke to the intent of his bill. And I had no complaint with that, nor did I have any complaint with the MIA's bulletin, sorry, 2315, sorry. And today when Commissioner Breen introduced the meeting and what it was going to cover, I was delighted actually to hear her say that there would be no change to force the council to submit to changes. We've annually go out and look for a master plan from insurers. It's a way that our board is allowed to provide the best value for the property. If that ever disappears, the common elements for our small association consists of a fence. We have 23 homes. We have a fence and we have a gate. Other than that, it's all earthen property. So there's not a lot of risk of loss on that. We have a reserves account with more than $80,000 in it. And we have a reserve report every 5 years to make sure that we're not under staffing, underfunding that reserves account. And we do include 10% a year for inflation. So we feel well covered, to be honest with you. I have an HO6 plan, and they're fully aware of what it covers. They're also aware of what the master plan covers. So I really don't know what the fix is, but if you're not going to grandfather communities, please be very careful with what you're doing to the actual owners of the condos. Whereas I don't know how much time I've got, but I got to tell you, in our particular condo, we have widows and we have retirees like myself, and spending additional money on a HO5 or an HO3 more than what I'm paying for the HO6 just doesn't make sense to me at all. The master plan is spread out among all of us condo owners, and it seems a more efficient way for us to do it. Now, do we understand what's uncovered by the different policies? Not individually, but we have a management group that we trust. So if you got a problem, you have it with the management group for not knowing it. And let me see, what else did I want to say? That's it. I'm really closed. I do appreciate that we'll continue at least with the way things were, where the council, as you call them, determines what policies are needed. Thank you.
Well, thank you, Mr. Nichols, and your comments are very much appreciated. I think one of the benefits here is obviously there are a lot of conversations that are happening in Annapolis. This information will be passed on, to the representatives. It's recorded, and of course, if people have specific questions that we're able to answer, we're happy to try to do that. Let me just take a second. I know that Ms. Fuller wasn't on, but I just wanted to see if I'm going to call again to see if she's here. Or Mr. Pritchett. Still don't think we see them. I know that Eileen Beneke looked like she was on, but she's dropped off. So I think in that event, we're going to turn to our last scheduled speaker, Lisa May from Maryland Realtors. Ms. May, we're very happy to hear from you. Welcome.
Thank you so much, and thank you for having me. Maryland Realtors worked for over 3 years on House Bill 98. And to answer some of the earlier questions that were posed, yes, some of these communities are forced to, whether through local zoning or whether through state codes, to organize as condominiums, even though they function more like a homeowners association would. And that is essentially the impetus for this bill, is for those communities that are smaller, that are entirely comprised of single family detached units, and that have very few, if any, common amenities, was to give them the choice of how to organize. And that is really what this bill was about. And what we talked about during the time that it was before the General Assembly. We did work with the Community Associations Institute on this bill. We accepted all of their amendments. And I don't believe any concerns were ever raised that this would somehow impact communities that already existed and that already had insurance that was working for them. And I think that that's what we saw from the Attorney General's opinion, and then also from the MIA bulletin. The whole idea was, this is an option for you, not something that you are forced to give up. So that as association residents, you can choose which one makes the most sense for your situation, which one provides you with, the most competitive rates for insurance. And that was really the bottom line with this bill. I do agree with the Legislative Action Council that I don't believe a full repeal is workable or even would be in the best interests of Maryland residents. Just because the General Assembly did spend 3 years trying to provide greater choice in the marketplace for association residents. So that's all that I have, and I'm happy to answer any questions, and of course, happy to work on this issue going forward.
Thank you. Thank you, Ms. May, for your comments. And I think part of the issue, at least for those people that are contemplating taking advantage of, you know, the choice that you've described, is whether or not the market, the insurance market in the current form structure makes that a practical option, at least in the short term, right? And the concerns about, you know, potential gaps in coverage. So with that, let me now give folks the opportunity that have questions or want to make comments. If you signal in the chat function that you want to be heard, Mr. I will bring you over, and we'll do that one person at a time. What we'll do is we'll then you know, open up your mic and you know, you can put your camera on if you like, or if you're on the phone, that's okay too. But we'll invite you to ask you to introduce yourself if you represent an organization, to identify the organization, and then we'll be happy to hear from you. Craig, I'm going to ask you to take care of that because I'm really bad at noticing it.
Yes, Nancy Egan is now joining us.
Nancy, you're on mute.
Sorry, my phone is ringing at the same time. Who do you know? Okay, there we go. First of all, thank you. I really appreciate the comments from not just from the insurance community, but from Robin and the realtors as well, because we're fielding questions for our insureds. I represent the American Property Casualty Insurance Association. We represent about 1,200 insurers throughout the United States. So this bill has been some interest to our different members. A lot of them trying to figure out how to actually provide a product to cover this new type of vehicle. Do they write them as HO6s or HO3s? And of course, what we're also hearing is that the increased cost that would be incurred by people switching from an HO6 and switching from an HO6 to a different type of HO3, HO5 is much higher. And of course, we've also heard that, you know, you have condo associations in place where they're mixed use, where there's some individual units, but the other thing is a complex. And then you run into the issue of how the current condo fee structure is set up. This wasn't contemplated at that time, and it would require, of course, a readjustment where maybe not all the members would be willing to adjust that based on that additional cost. So that's a concern on two parts, the condo association board as well, when you have a mixed unit group, and then of course the additional cost incurred. And then insurers are also concerned about how to provide this product because this is something totally different than what's been contemplated in the marketplace prior to this legislation. So thank you.
Thank you, Nancy. I appreciate your comments. Sort of also really helping to hone in on really the practical implications of this for people that are trying to navigate the potential for change. Is there anyone else who is in the attendee list who has any questions or who would like to be heard today? Do you see anyone, Craig?
I am not seeing anyone.
Okay. You know, as I had said at the outset, our focus today really was on HB 98. I know that people did have questions about the other bill on the reserves, but I don't see anybody who is asking questions about that. So I'm going to give folks one last opportunity. In the meantime, I will point out that in chat, you will see that any follow-up questions can be sent to jamie.sexton, SEXTON, at maryland.gov. And we have Robin's contact information there as well, especially if you want to track sort of what's happening with the development of legislation. If we still have no other commenters or people with questions, Robin, you want to speak?
Yeah, I just want to tell everyone, so once the session begins, you'll be able to track the bill at the Maryland General Assembly website. It does not have a bill number yet. We did not make pre-file, but that's probably the best way to track where we're going. If you want to come up to Annapolis and give testimony, you'll have to sign up on the Maryland General Assembly website. You can also furnish the General Assembly with written testimony. So any support, I think, will be very helpful. One thing on reserves, the reserve bill is going to be another LAC initiative bill. So we'll be looking at that this session as well. Got a full plate this year for sure.
Okay, well, Craig, if you can confirm to me that we have no other hands up or nothing else in the chat, I think we're going to give a sincere thanks to everyone who spoke today. Your comments in particular were particularly informative and helpful. And if there are questions that you have or additional comments that you wish to make, direct them to Ms. Sexton. If there are questions, we will get back to you. If there are comments, we will take them on board. We will make them public along with this transcript, and they will help inform us as we react as a state agency to any bills that go in on this topic in the coming session. So with that, again, thank you very much. I'm going to give you 5 minutes of your day back. Have a wonderful afternoon. Take care. Bye-bye.